Imagine waking up one morning and realizing your home just lost 20% of its value overnight. What would that mean for your mortgage, your equity, and your future? In Texas, multiple cities are flashing red warnings right now, and 2025 might be the year when the bubble bursts. Stay tuned because the next few minutes could save you thousands. Hello everyone, and welcome back to the channel. And today we're diving deep into the Texas housing market forecast for 2025. We'll explore 15 Texas cities that analysts and local experts believe are most at risk of significant home price corrections. For each city, we'll look at what's driving the decline, from overbuilding and weak demand to rising mortgage rates and slowing job growth. Whether you're a homeowner, a buyer, or an investor, this is critical information. Let's get started. Number 1. Pecos, Texas. Pecos is one of the smaller, less diversified housing markets in Texas. According to Zillow forecasts, Pecos could face a negative 12.7% price drop by early 2026, with the slide potentially starting in 2025. The city's economy relies heavily on oil and gas, which makes it vulnerable to energy price fluctuations. When oil rigs slow down, jobs decline, and with fewer workers moving in, housing demand quickly dries up. Pecos also saw a construction boom during the last oil upswing, creating more inventory than the population growth could sustain. Number 2. Big Spring, Texas. Big Spring's housing market is also signaling a significant drop, with projections of negative 11.4% by early 2026. Like Pecos, Big Spring's economy is tied to the energy sector, and any drop in oil prices can hit employment hard. Younger residents are moving to bigger cities for better opportunities, shrinking the local buyer pool. Meanwhile, builders added new housing inventory during the boom years, which now sits unsold. Number 3. Alice, Texas. Alice, a mid-sized city in South Texas, is forecasted to drop around minus 11.3% by March 2026. The local economy is smaller and heavily tied to a few industries like energy and agriculture. The city's lack of diverse industries makes it more vulnerable to downturns compared to larger urban areas. Analysts say this combination of low demand and oversupply could fuel a sharp decline in 2025. Number 4. Raymondville, Texas. Raymondville is another high-risk city, with home prices projected to fall around negative 11.2% by early 2026. This city's economy depends on a narrow range of industries, leaving it sensitive to job cuts or downturns. Current data shows rising inventory levels and more frequent price cuts on listings. If these trends continue, 2025 could bring double-digit losses for homeowners here. Number 5. Sweetwater, Texas. Sweetwater, a small West Texas city, has started showing early warning signs of a price slump. Analysts suggest a 10 to 11% potential drop in the next year. Sweetwater's economy is reliant on agriculture and small-scale manufacturing, industries that have struggled under inflation and rising operating costs. During the last 2 years, developers added new housing stock, expecting continued in-migration, but that growth didn't materialize. Number 6. Midland, Texas. Midland, located in the heart of the Permian Basin, has been a boom-and-bust market for decades. Experts warn it's heading toward another potential correction of 8 to 10% if oil prices soften. Recent reports show a slowdown in home sales and an uptick in inventory. Homes that were selling within weeks are now taking months to close, forcing price reductions. If global energy demand dips in 2025, Midland's housing market could feel the squeeze quickly. Number 7. Wichita Falls, Texas. Wichita Falls, a mid-sized North Texas city, is also on watch for a possible 7 to 9% drop in home prices. The local economy has been stagnant in job growth, especially in the manufacturing and retail sectors. Unless new industries or major employers enter the area soon, Wichita Falls' housing market could weaken further in 2025. Number 8. Amarillo, Texas. Amarillo, a key panhandle city, may face a 7 to 8% decline in 2025 as buyer activity slows. Its economy depends heavily on agriculture and meat-packing industries, both of which are sensitive to commodity price swings and labor shortages. Recent data suggests slower in-migration to Amarillo compared to the booming years of 2019 to 2021. 2021. Number 9. Lubbock, Texas. Lubbock's housing market is projected to see a 6 to 8% pullback as higher interest rates dampen affordability. Though Texas Tech University provides some economic stability, it also means a large share of the housing market is tied to students and rentals. Number 10. Abilene, Texas. Abilene, a central Texas city, could see home values fall 6 to 7% in 2025. Job growth in the city has been moderate, and younger residents continue moving to larger metros for better opportunities. This has reduced the local demand for homes, especially for mid-range properties. New construction has added inventory to a market that was already slowing, creating more competition among sellers. Number 11. Brownsville, Texas. Brownsville's housing market, situated along the U.S.-Mexico border, faces potential corrections of 5 to 7%. The city experienced a surge of investor-driven purchases during the pandemic, pushing prices higher than local incomes could support. Now, with affordability stretched and fewer out-of-state investors buying, demand has weakened. Job growth has slowed compared to its peak in 2021, further dampening home buying activity. Number 12. McAllen, Texas. McAllen, another border city, has begun to cool after years of rapid appreciation, with experts predicting 5 to 7% price dips in 2025. The market's affordability advantage has diminished as home prices surged over the last few years. Number 13. San Antonio, Texas. San Antonio, one of Texas's largest metros, has shown early signs of weakness, with its median home price dipping 0.4% year over year in May 2025. Sellers in some neighborhoods are already cutting an average of $15,100 from listing prices. While the city's economy is diverse, affordability issues may continue to weigh on demand. If rates remain high through 2025, San Antonio's housing market could see more widespread price corrections. Number 14. Austin, Texas. Austin, once Texas's hottest housing market, has already cooled, with median prices down 7.7% from a year ago. During the tech boom, home prices skyrocketed, but with tech layoffs and reduced in-migration, demand has slowed. Analysts predict Austin may see another 5 to 7% decline in 2025, especially in higher-priced neighborhoods. Number 15. Dallas-Fort Worth, DFW, suburbs, Texas. While the core DFW area remains relatively strong due to job diversity, several outer suburbs face growing risks of a 5 to 7.3% price decline in the next 12 months. Inventory in these suburban communities has climbed, forcing developers to offer discounts and buyers to negotiate harder. Analysts warn that fringe DFW neighborhoods with oversupply could be among the hardest hit in North Texas. And there you have it, 15 Texas cities that experts believe could see home price declines in 2025. While no forecast is guaranteed, keeping an eye on these markets can help you make smarter buying or selling decisions. If you found this video helpful, hit the like button, subscribe, and ring the notification bell so you never miss our real estate market updates. Comment below and tell us which city you're watching. We might do a deeper dive on your area next. See you in the next video.